to the angle, no time to delay. Markets rise and markets fall. Atomcash is ready to answer the call, while the bulls charge hard and the bears dig deep. The angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. Now, today we have an exhilarating lineup to give you guys as many segments, as much information as quickly as possible. Mess that up again. Anyway, if you guys could do me a quick favor, please share out the stream, because YouTube dropped the ball again. I see it's kind of working for some people on YouTube. It's not on others. If you're watching on X, do me a favor and like and share the stream. I know I asked you guys to do this anyway, but please do me a quick favor, because it probably sent out like 5 different notifications. So if you're watching right now, please share the stream out. If you can, comment something, some sort of interaction, just because something got muddled up in the mess of trying to run the stream today. And today's going to be a good one. Someone drank a few too many polars. No, I'm good. Okay, we can see. Good morning, Negum. Hopefully you guys can see me. Sorry, I don't know what the hell happened. I started the stream at 9:15 and just went to hell ever since. But today's going to be a great day. Why? Because I got a lot to talk about. So, unfortunately, we lost about 8 minutes of my runtime here, which I'm a little annoyed about, but we'll try to fast forward and get as much in as we can before the market opens. So guys, again, if you could do me a quick favor, please share out the stream. I'm not going to do my little spiel about begging you for help, but I know there's not a lot of people watching right now, and there's even fewer because of the stream got all bungled up. But please, if you're watching on YouTube, like, subscribe, comment, etc. If you're on X, share it out. I'm only going to be live on YouTube and X today because something happened. So please give me a hand here today, guys. Help me pull in all the people that might have been lost during the rigmarole this morning. Anyway, real quick, we're going to go over our Catalyst Watch for the day, because, again, we're going to go super fast, so stick with me, guys. We got 5 minutes until open, so we're going to fire through everything as quickly as we can, get you prepared before the market opens. All right, here we go. We had non-farm payroll pre-market this morning at 8:30. This little volatility bump up and down. Right now, you've got Fed Hammock speaking. We have S&P manufacturing PMI at 9:45. At 10 o'clock, we have manufacturing PMI as well as Michigan sentiment. You guys know, you've been watching the program for a while. Michigan sentiment is one of my favorite things to trade. If there's an opportunity to trade, we'll keep an eye on that. Make sure you watch IWM for Michigan sentiment. Again, it sounds like I'm talking about 2x speed because I need to get through things twice as fast as normal, so I'm going to talk as quickly as I can. Someone let Eminem know that he's got someone coming on the heels of his fast talking abilities. Anyway, it's me. Anyway, outside of that, not really too much in terms of Catalyst Watch for the rest of the day. You do have Chevron earnings, so if you're oil exposed at the end of the day, make sure you watch that. Their earnings call is at 11, so keep an eye on that. Outside of that, looks like a pretty clean day, all things considered. Now, going into the market. Yesterday, what an interesting day we had. Rewind. Let's go to 5-minute chart. Bada bing, bada boom. Here is yesterday. All right. We've hovered around this level, like we said, while I was alive, broke down. I actually grabbed a long, and I mentioned that on the program. I grabbed a long somewhere in this area off the 636.5 tap, closed it out somewhere up here. Then I actually grabbed a short up here, rode that all the way down, made about 170% gain, something like that. And then I also grabbed at the same time up here a put debit spread, and that was at like 52 cents. That ended up, I closed at 98 cents, so almost a full 100% gain there. And we closed the day right around this 631.54 LOI, moving lower after hours, mainly due to Apple and, mainly due to Amazon, not Apple, but Apple and Amazon reporting their earnings. Okay, gap down into the open today, or into the pre-market open, and now we're grinding lower, almost near pre-market lows. The market is currently down 1%. After yesterday's fall from grace. Let's look over what happened at Amazon and Apple real quick. Amazon currently down about 7% off the back of reporting their earnings. A little volatility there when they reported, and then it was not a great conference call. And the stock price is reflecting that, currently trading around that 218 level. On the daily here, I believe that's around the POC. POC is at 222. So keep an eye on that. We're going to open around the 50 MA here. So decent bounce spot if it was to get a bounce. As for Apple, go over to Apple. Really pretty quiet. So we'll see how this reacts. The implied move on this, I believe, was $8. Let's see if I get yesterday's data. No. I believe the implied move on Apple was $8. So we're definitely within the implied move. So this has a trading opportunity today. Anytime you have an earnings report and we don't hit the implied move, that's a really good opportunity for a day trade specifically. So we're going to keep an eye on Apple today because this could be actually a decent mover. It only moving about $3 or so leaves the window of a $5 push, essentially, in this case to the upside, or a $8 push to the, no, yeah, $8, $9, $11 push to the downside. So keep an eye on Apple. Tesla a little bit red in pre-market here. We already talked about Amazon, Google, red, Microsoft. Microsoft, this daily candle after their earnings, woof, not great. I still have my my bear position on, mainly because I can't close it and it's already at a full loss and I've got 2 weeks left on it. So who knows? Maybe that'll work out for me. And it's a spread, so you never know. That might still work out for me. I thought it would be very funny if this gap filled yesterday, and this is a crazy candle. Now, you did have a similar, marginally similar bear candle here after earnings, and then it proceeded to rock and roll to the upside. So we'll see how Microsoft reacts today. Okay, deep breath. We fast forward through this morning's little overview like I like to do. Q's down pretty good. IWM down pretty good. We're in a substantial bearish area on the market. I've got a lot to say. I do want to wait till the market opens about that. And I also want to catch my wind here for a second because my brain was going too quickly. As Tom said, I did drink too many polars. I did not. I had a Celsius this morning. But I'd like to get my bearings before the market starts because I lost that 7 minutes of time due to the errors of many different streaming platforms. So again, last time I'll ask it, just only today I'm asking more than usual, just because I already know, and I've had people message me in the Discord that they don't know where to watch or anything. Do me a favor, just share it out, like the stream, drop a comment, say hi. If you're in the YouTube chat, say hi, whatever. Helps me out in the algorithm. Thank you very much. Okay, let's go here. Let's look at our sectors. Oh, I even forgot. We have segments today. We have a brand new segment, but I'm going to need your help. This is especially why we need viewers today, because we're going to do a new segment called One Chart, 1 minute, one chart. One chart, 1 minute. Hold on. What did I name it? 1 minute, one chart. So I'm going to look at one chart for 1 minute, even though I named it 1 minute, one chart. Anyway, I'm redundant today. We're going to look at one chart for 1 minute. I'm going to give you guys a short-term, medium, and long-term outlook within a 60-second window. So it's going to be rapid-fire TA and overview analysis of a company, mostly looking at like 5 minute for short-term, daily, weekly, and monthly for medium and long-term. So if you like that, I will need your help. You guys are going to drop tickers in the chat, names that I ideally don't look at all. That would be pretty cool because that would be just totally fresh to me to look at. So if you got some obscure tickers or whatever that you may be interested in, drop them in the chat. You can start dropping them now. We'll get to that segment around just before 10 o'clock. But the whole idea is to do quick, like, lightning round kind of thing for 1 minute. Each and every chart, give you short, medium, and long-term outlook. Kind of challenging myself to see how well that could do, and I thought it would be kind of a fun segment to share with you guys. Okay, the market is now open. Let's take a quick overview of our sectors. So I got the SPY open here. We got our sectors here on the left-hand side, so we can get an idea of how the market's moving here into this gap down. Now we have XLU and XLE red at the moment, with consumer staples pushing up green pretty solid. Tech obviously down. I shouldn't really say obviously, because consumer discretionary, which is down here, that's your Amazon. So that's down 2%, and rightfully so. Banks taking a big hit today. Industrial's taking a big hit. Tech taking a big hit. So there's a little bit of fear seeping into the market. Consumer staples pushing up nicely. If we see XLU and XLE push green, this could be a continued bear trend on the day, just from how money flow is looking right now, looking at the sectors. You're going to want to watch this pre-market low on SPY. 624.86. And also, let's check out our volatility, because we talked a lot about that, and I'm betting, yep, we broke 17. We broke 17.75 specifically. That was the level I told you guys. As long as we're under that, it's a buy the dip environment for the market. We are now above it. So it is no longer a buy the dip environment for the market. This is now a neutral market based on just volatility alone. Now that volatility is up here, we are in a neutral market. Look at VVIX up at 107. So we're in a very neutral market right now. NVIDIA, decent move down here, 173 into the open. Let's keep an eye on Apple, because I want to play this, ideally. You guys want a day trade? I'm going to rock and roll with Apple. This might be one of those scenarios where Apple is Atlas and it holds the whole stock market on its shoulders. Going to give it a minute or two here. We'll see. 210 might have been the bottom. Like I said, that implied move was $8. So you're at 6. So the implied move could be toast already within this 1 minute move. Like, hey, it is what it is. But we'll see if we can get that opportunity here. If it kind of levels out a bit. Market dropping. No bueno. Q's pretty flat. Marginally obviously helped by SPY. We're going to talk about IWM also. You're just below the golden pocket here. That's not good. If you're a bull on IWM, needs to get back in this golden pocket. That's like the bottom of that range that you want to be in. This weekly candle's disgusting on the Russell. For right now, that is not looking good. No, no, no. Yeah, 210 might have been the move there on Apple. If we come down and we get down 211, I'll probably look for an entry there. I'll probably take a 0 DTE on it, actually, if we get back to like 211-ish area. Basically like 211 even, honestly. This is going to be where the bulls are probably going to hide today. A little bit more. Let's pull up the chain, keep an eye on it. We'll keep an eye on the 200 and 212.5s. Here, I'll add that to the watch list. There we go. Keep those at the top. Here we go. All right, be ready on these 212.5s. All right, I'm going to start scaling in here. I'm going to add a little more. All right, that size. 212.5 calls, 115 fill. We'll see how that works out. Basically going to risk low a day here. But with this volatility, especially coming off earnings, once we breach like $1.40, it could start trimming out. There we go. $1.44, $1.43. All right, I'm going to start taking a trim right here. Remember, it's a 0 day, so don't be too risky. That's 30% there. Nice and easy. Still above entry. Basically, I want to see it crack. So you're making these wicks higher. I'm sorry, these lower end wicks. So basically, I want to get above right around here. Basically going in the money. 212.50, 212.48. Getting above that, these are going to push north of $2 pretty quick, probably. If you missed the trim, I trimmed out at 150, 145 to 150. So someone asked that question yesterday. That was a market order because I wanted to get in and out quick, right? I wanted to get out, I wanted to make my money and get the hell out of the way. But still green on the trade right now. If you missed the trim, again, look north of 140 for your opportunity there. Touching the POC, starting to push here. There we go. Here's your second opportunity if you missed it. Market 145, so here's your opportunity if you missed it. Once again, that was your second chance. These are 0 days. They're going to be volatile. You got to be quick. So I'm trying to speak in ahead. I know sometimes the stream's on a delay, so I try to talk in advance. That way you know what I'm looking for. You got it. Again, getting into the money here, that's what I'm looking for. If we can get into the money, we're going to push the highs here. I know it's crazy because the market's looking pretty red today, but when that happens, you obviously see a lot of fear in the market. I think a lot of people would run towards Apple because I didn't hate their earnings. Their earnings were actually pretty decent, and I'm not the biggest Apple fanboy. In fact, I kind of think they need to change a lot of things. But when people are scared, they're going to run to safety, staples. And if there's a safety tech stock, at least as it sits right now, speculatively, that could be Apple. You're at the 200 MA here, so you could get a second entry here. If we tap 210, I'm actually going to load 210s for a second play here. If we tap 210 and hold, so essentially low a day. Otherwise, I'll close out the rest of my zeros if it breaks and pushes lower. All right, let me load those up just so they're ready. And you guys can see them on your screen as well. I'll put those at the top. Okay, those are at the top now. There we go. Oops, Apple. Ooh, okay, here we go. All right, looking at the Apple 210s. All right, I'm long the Apple 210s at 215 average. So now I have the 210s and the 215s. I'm sorry, the 210s and the 212.5s, both 0 days. And let me log that real quick. 5, 3, 215. Okay. All right, let's see where we go. So assuming this bottoms out here, we get back to the POC. And again, pushing POC to get those 212s in the money. These 210s are probably going to be worth, I'm going to guess around 350-ish. Yeah, 320. And obviously those 212s, depending on how quickly we get there, will change their value. Because this is a 0 day. So, but we're looking, obviously you're seeing some bulls push up here, noticing the bottoming wicks here. Remember, we have an $8 implied move. We didn't necessarily hit it to the top side and we didn't hit it to the downside. So that gives us the opportunity to potentially make money here. Because stocks love to hit their implied mood after earnings. Let's take a peek at the market real quick. I got the contracts up here, so we're not sleeping on it. SPY pushed down to the downside, getting a little bit of a bid here, finding some bullishness down here off the low at 623.71. Same thing with Qs, trying to find a little bit of bullishness, and IWM holding support at the 215.18 LOI. Look at that LOI. Live in living color. Wick, 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 wick. Boom. We got to get over, if I'm a bull on IWM, I need to close over 217 today. Otherwise, I'm going to be a little worried. See those Apple contracts moving, so we'll pull back up Apple. Those 210s are now at entry, or around entry. POC has moved to down here, so we're finding some level of support resistance down here around 211. So we'll see how that works out. And guys, don't forget, we're going to do that 1 minute, 1 chart segment in a little bit. So if you have any tickers, especially if they're obscure tickers, drop them in the chat. We're going to analyze those as the day goes on, or when we get to that segment. We'll look at short-term, medium-term, and long-term outlook for those names. So if you have Apple, be the shining star in a sea of turds. We're at the 210. If it doesn't reverse here, I'm going to close them both. Which would mean that 210 is going to be a loss, and the 212 will more than likely be a loss. Or flat. I'll give it another 2 minutes or so, because this could be a sweep before pushing up higher, and I'm okay with the risk. But we are dropping on Apple. Sure, the market's not liking that either. Also, the other thing, if I'm ever in a losing trade, I don't like to close it immediately right away, because there could be, like if you get a sharp rebound, IV is obviously going to increase. So if I'm by the open side, I want to get that IV increase on the reversal to get out if I'm looking to get out. Sometimes you'll sell at the bottom and go, oh no, fear, and then you'll actually lose more money. So it kind of depends on your risk. But we'll see if the bulls can hold it together here. They're not holding it together. Like I said, I'll give it another minute or two. If we don't see any fervorance here by the bulls, then I'm getting the hell out of the way. So this is their chance right now. This candle, the next candle, and one more to get back over that 210. If it just fails here completely, then I'm getting the hell out of the way, and I'll probably lean bearish on the day. All right, getting out of the way. So that was a loss on the 210s, unfortunately. It happens. It's a good risk. And on the 212s, yeah, a scratch was a little red on it. Oh well. Oh well, it happens. Sorry guys. Hopefully you made a little money on that 212. That was my second loss this week. I've made 20 trades. That was my second loss. Turd. Oh, well, let's look at the market. Pushing that 623. Man, it is not looking fun out there. I know, kind of crazy to be a bull on a bear day, right? But that's how I like to trade. That's how I like to play. I like to be risky like that. That's where the opportunity lies. We're going to get rid of these, so I don't have to look at those. SPY's just dying on a vine right now. Qs are dying. IWM down 2%. So at this point, especially with the VIX up at 20, VVIX at 107, we might just be completely on a full risk-off day, as I like to say. Let me just check something here on my second screen. So what we could be seeing is actually a volatility expansion, which means volatility is going to continue to climb to the upside here in the short term. Remember I gave you that parameter of 17.75. That was like the peak. As long as volatility stays under that, we will see a buy the dip environment. The market stays bullish. We broke that. We broke that into the open. And now you're seeing volatility expand. So for me, and as you can see, I just got roasted on the Apple call, right? For me, when we get to that point, it becomes a very risk-off environment. I don't want to take too much risk. And even with my Apple play, I went pretty light. Like, I did not do my normal size at all. Look at Nvidia, down 3%. Meta down 2%. How in the hell is Microsoft still holding it afloat? It just knows that this is the only mega that I have a short position on. The market knows. Everything else, every other mega cap essentially is eating dirt. Why couldn't the Amazon candle be the Apple candle? Sucks. Yeah, today's going to be a risk-off day. So let's talk about what to look at longer term here, right? So we're going to zoom out a little bit and zoom in here. So this is IWM. So we're going to look at IWM, the Qs, well, mainly IWM and SPY. I like to look at the Qs sometimes, but I like IWM and SPY more. IWM is falling into this area of old support. It's under another area of support that I don't really want it to be in, but it's in a cluster down here. Now that means there's a cluster of significant areas, right? The 200 MA right now is 215.22, and we're under that right now on the daily. We're underneath the golden pocket, so these two dotted lines here. So 217, again, that's the area that I want IWM to close over today for there to be some semblance of that near-term bullish move into August. The last few days have flipped the script. 1, 2, 3, 4, 5, 6, 7 red daily candles in a row for IWM. Getting railed here, unfortunately, for your small and medium cap names. We even broke the green SAR here and at a gap down today. And now we're under the 50 MA and the 200 MA on the daily. Daily is looking bearish. The weekly's starting to get there. It basically, like I said, it needs to push up today for there not to be like a bear candle, essentially. Or it is going to be a bear candle, but not as bearish of a candle. And the monthly, if I could see it, it's going to be a meh-month start of the month here for August. Now, I do want to revisit something. So for those of you who are watching, I mentioned, and we talked about the SAR indicator on the monthly, right? And I had someone ask a great question in our community yesterday and said, Adam, did you load up on your leaps for the SPY yet? I said, no. Reason being, and I mentioned, once we break that red SAR to the upside, that's when I'm very excited the market's going to be long. But just like any other breakout, you see a lot of the times it has to backtest. And remember, this is a monthly time frame. So we got the break, so I'm going to stay long on the break, but it more than likely has to backtest. And what that means is SPY could get a little reddish here, down to the tune of somewhere between 607 to 609 in the near term. So I'm saying in the next few days up until August, right? That's where I'm looking for SPY, or up until the end of August, I should say. That's where I'm looking for SPY to potentially interact. Here's why. Where that would back test where we got that red monthly SAR break. And if you don't believe me, go back in time, with the exception of the financial crisis, and there's one other time when I looked. Whenever the red SAR breaks, it mostly, 80% of the time, will back test that level. First example here in 2023, and again, this is on the monthly time frame. Broke here, had a nice little rally, came back down. So these are 3 months here where it was bearish, back tested the monthly SAR, rally. Go back over here. Broke the red monthly SAR, popped up for a month, had 2 bearish months, back tested the monthly SAR, rally. Go back here. Had a bullish month after the break, back tested the monthly SAR. This one actually got a little bit more underneath it, so that one fell through the monthly SAR area, rally. And this one was the exception to the rule. This is in 2015. Still rallied, so broke the red SAR, came down, and never broke the green SAR. So it got pretty low there, but eventually did still rally. Here you go again. Broke the red SAR, 3-month rally, 2-month fall. Back tested where the red SAR was, rally. I could keep going. This is the financial crisis, which is the exception to the rule. But when that monthly SAR breaks, it tends to back test where the monthly SAR was, and that monthly SAR was around that 607 to 609 area. Now, it does mean you could go a little bit lower there, like we saw in that one example. Where is it? Over here, where the monthly SAR was around 177, and it went all the way down to 157. But again, that was in a 2-month, 3-month period. 4-month, I guess, if you want to look all the way out before it returned back there. So as long as you're buying things with enough time, you're still going to eat a big move here. Looking at 2-year plus, again, leap contracts or leap spreads. That is the opportunity. So to be very clear, where the most opportunity is going to be long term, so we're talking 1+ years, 2 years on the market if you're an options trader, I'm going to wait until we back test where the red SAR was, and that was around, I'm going to say I'll start to add between 607 to 610. 6.9 was where the top was, but 607 to 610 is where I'd start to dip my feet in the water there, and obviously use more short-term technical signals like your weekly and whatnot to get a better idea of where a good entry could be. And ironically, if you look at here on the weekly, getting right around here, where's that resistance? This is 604, and I took all my lines off, but look right around here. If I just put the crosshairs here, 604-ish is where we start to bang our head against that ceiling before we got that break here. And that's roughly where that monthly SAR was. So getting back to that old resistance there, that level between that 607, 610 area, that's where I want to start opening those longs, even though we could go a little bit deeper, possibly. But if we're talking leaps, that's where the opportunity is, in my opinion. So that's what you want to keep an eye out for. If you are someone who wants to super long the market like me, waiting for that opportunity, that's where the opportunity is going to be. Overall, though, guys, this is all indicative of a hands-off day completely. And it's rare that I say it's a sit-out day, but when you get a volatility breakout, I don't like to trade. And why I don't like to trade on a volatility breakout is because there's more human emotion, right? More people are making irrational decisions. Algos are going to be a little bit more sensitive to when people are buying or selling, right? You have people running for the gates, running for the doors. I mean, SPY's down almost 2%. Mind you, we had this boring, slow, plodding rally to the upside, and now we're actually getting some volatility. We're actually getting some price action here. If you do trade today, you trade with light size. Be very smart with your entries and exits. Otherwise, when you see volatility this high, and keep in mind, it is also a Friday, and Fridays tend to be riskier in general. When you see volatility pop like this, when we broke that key level of 17.75, that puts us now out of the buy the dip environment. We are now shifting from a bullish, or I shouldn't say bullish, but the market was flowing bullishly, meaning we're more bullish than bearish, right? to a neutral market, meaning things can be bearish or more uncertain here in the near term. Combine that with what we're seeing on the monthly with SPY, what we're seeing with IWM, the best thing to do right now is shift more defensively into August. You will have those opportunities. Some people will tell you, why don't you short? The market's clearly in a downtrend, short it. I would rather wait and let the chips fall and then wait to take a long position, because 9 times out of 10, you'll make way more money on a long than you will on a short if you have the right, or the correct entry, I should say. So most people shouldn't consider hedging. And when I say that, I'm not trying to dissuade you or anything. I see a lot of people on social media talking about, oh, I bought puts as a hedge, yada, yada, yada. I made all this money, but I didn't sell them. That's great and all. But if the market gets some sort of news or anything and it reverses hard to the upside, you're going to lose a lot of money because you tried to hedge and you don't have the ability to hedge. Whereas if you buy equity, guess what? Equity doesn't expire. So if you have a stock you really like and it's on discount today, which we'll talk about that, this could be a good buying opportunity, even though we might sink a little lower. If you're patient and things make sense where the risk and return is, or risk to reward is, this is a good opportunity to have some cash on the side so you can make some more money. Now, I do want to talk about Wendy's because I made a video on Wendy's, and now, full transparency, I'm out of this trade. I took a loss on this trade. This was a loss for me. I got in somewhere around this like 11, 14-ish area. My stop hit right around the lows here because that's what I was willing to risk, as I said on this program. And now we're heading into earnings. So I'm not necessarily bearish on Wendy's, but what I hate, and this is what I was playing for, this is what I was risking, is we are breaking the 200 MA on the month. The monthly. That's super bad. You don't want that. So you have a really bearish candle that shoved its head below the 200 MA on the monthly, which is why I exited my position. The risk reward didn't make sense there. Now it could go even deeper. With that being said, you do have earnings coming up on the 8th. Could reverse on good earnings, you'll see. But as it sits right now, I have no position in Wendy's. I thought I'd bring it up on the program because I talked about it. I even entered it live on the program. And this is where I realized a loss here. I risked those lows, which is basically right around where the 200 MA was on the monthly. So it's good risk to reward there. I was risking about 70-cent drawdown or something like that. Got out of the way. It has since moved down lower. And on the daily, on the weekly, and on the monthly, it's still pretty heavy. So taking those calculated stabs on like key support levels here, especially when you have 2 months that closed above it, is worth it. But it's also worth not lying to yourself. When you get a break, you get the hell out of the way. And that's what I did. I got the hell out of the way. Okay, so here's another great example. I got in those Apple 0 DTEs, right? Those calls. Apple fell. Pretty good. Those calls right now, 16 cents, 44 cents. So yes, I ate a loss, but I ate a much smaller loss. And this is something that a lot of traders have a hard time with, and it's having the humility and to be humble enough to admit when you're wrong. I was wrong in that trade. It passed my risk. I said I wanted to risk 210. I'd give it another minute or two to see if the bulls could tap in. This candle said no to me, and I got the hell out of the way. And I'm happy I got the hell out of the way, and this is what I would file under a good loss, because I could have lost a hell of a lot more. These contracts could have went in the dirt like they are right now. Now, granted, you could get a reversal here, could recover, whatever, but I want to play what could, should happen. I want to play the chart. And the chart said get the hell out of the way. I got the hell out of the way, save myself some money. That's a hard lesson for a lot of people. And again, part of me doing this program, you're going to see, I'm sometimes going to fail, sometimes going to make mistakes, but I want you guys to learn from those errors as well. Learn that the risk to reward was solid. I made a good judgment call on the risk to reward, but I also got the hell out of the way when it turned against me. I saved my capital, because at the beginning, the most important thing at the start of every day is to preserve your capital. You cannot trade if you have no money. If you run out of money, you can't trade anymore, right? So you lose, you're out of the game. So when you're wrong, just say you're wrong and move on, right? For you guys watching, most of you, unless you're here from another community or whatever, most of you get to trade in front of a screen. You don't have to do it in front of a camera, in front of a bunch of people who are going to criticize and look at what you're doing, call you stupid and whatever, right? So you have no stress on your shoulders, right? You don't have to report to anyone. You don't have to make yourself seem a certain way. And I'm not saying cry me a river by any means. What I'm saying is you have no reason not to be humble. It's just you and your broker at the end of the day, right? For me, it's me and my broker and everyone's eyeballs watching me fail in real time. It's not a great feeling, but you take the good with the bad, right? But you guys don't have to do that, right? You guys can just trade on your own, and when you're wrong, just say you're wrong, move on. There'll be another trade. Don't water your weeds. Water the beautiful flowers of your portfolio, the things that are doing great. Don't water the weeds that are choking out and sucking you dry of all your money. Keep that in the back of your head. I promise you, that will do you more good than bad until the end of time, really, as long as you're trading. VVIX up near 110. VIX is at a 21 almost. UVXY 17. We're getting a big volatility breakout. Meta dropping 750. Microsoft grinding lower, but not really with too much fervorance here. Down about 1%. Nice little bearish continuation candle here. I'll let you guys know if my my bear position on Microsoft ends up working out. We'll see. We will see. Like I said, that's toast. It's already a full loss, essentially. I can't even close it because the spread's so wide. Actually, I'm going to check it right now. I can't even close the position because the spread is that wide on it. Let's see. Yeah. So the max I was able to lose in this trade was $2.50 for the spread because it's a 250 spread. The bid's at 115. The ask is at 440. I can't even close this if I want. I mean, I could try. I probably couldn't close this even if I wanted to, because the ask is so high. It's so spready. So we'll see. We'll see if that works out. But it is definitely looking like a time to be defensive in the market as a whole. Things are not looking fun. For what it's worth, my stop loss on SoundHound has triggered. So I am out of my SoundHound long. RIP SoundHound. They have earnings coming up also. Unfortunate. I like that one quite a bit. Unfortunate. It is what it is. Alrighty. Yeah, sorry I'm not more energetic. The whole start of the stream threw me off. This kind of open's throwing me off. I don't love it at all. We might find a short opportunity here. Let's see. So also, when you see the market fall like this, and this is how I made money yesterday, I grabbed calls and rode a little bit of a ride up, and then I flipped bearishly and went bear on the market. This could be an opportunity if we get about $1 or $2 relief here, where you could grab a bear trade. Again, there's a lot of risk on the table though. Like, things are risky. I'm sure let's check our at the money IV on SPY. Yeah, 33. IV is expanding. It is risky. It's looking like August is going to be one of those months, which, to be fair, makes sense. We had a nice little grindy pullback. In sense, I don't think the worst is over yet. Well, I agree. Like I alluded to, we need to go back and back test that. And we're talking the monthly on SPY. We need to go back and test that SAR level. So that needs to happen before I flip super long anyway. So, I mean, this is bad. Look, Qs are down 2%. IWM down 3%. SPY down almost 2%. It's gnarly. It is gnarly. I'm actually going to grab some insurance right now. Time to get some insurance. Looking at a put credit spread. No, I'm sorry, put debit spread. Well, IV's high. So when IV's high, I want to sell in case IV drops off. But IV probably would expand today. So I'm going to do a put debit spread. I'm going to wait it out here, but I'm eyeballing a put debit spread. Probably the 622 short, 623 long, or the 621, 622. No, this thing's gonna drop. Yep. All right, I'm gonna hit this real quick. Let's grab some insurance. I'm gonna go a little aggressive. 619.22. I'm gonna go a little aggressive on this. All right, I grabbed the 619 short, 620 long. Ooh, did I even fill? I don't even think I filled because that fell so fast. I'm at the ask. I didn't fill. Hold on, I'm trying to fill an order. Okay. So I'll ham it up a little bit more. Try 43 cents. Try 44 cents. Bro. Everyone's trying to grab protection right now. I can't fill in this freaking trade. Alright, 46 is as much as I'm going. If I can't fill at 46, I'm not taking it. Alright, I've got an order on a SPY bear put spread. Should be able to fill in this green, or this little wick here for 46 cents or so. There we go. Okay. So I'm long the 620 put 0 DT. I'm short the 619. I'm betting that we get under 619.22. As crazy as that is today. Be more bearish. We'll see. SPY today. Put debit spread. Buy to open. 620. Put. Sell to open. 619. Put. 46. Debit. To strategy. To strats. If you don't know, I run a little small account program in our community. And today we need a little protection. So grab some spreads to hopefully protect us a little bit here. I know it seems crazy to short the lows, but sometimes it makes the most sense. And we're kind of in that environment. Like I said, if that 619.22 breaks, we're probably going to push a little bit lower. There's a lot of fear right now. In terms of IWM, we could get down to 210 today. In terms of the Qs, we just had a gnarly candle there on the Qs too. This could drop. That could drop pretty solid. Not really like a significant point where we could get a little bit of bounce there. In SPY, as long as it's remaining basically under like 621, it's heavy. It's heavy. VIX keeps breaking every every area. Little resistance, it just keeps breaking. If we see VIX north of 23, we're gonna have a hard drop today. Today's gonna be a bloody day. VVIX still popping up, UVXY popping up. I think there's a chance bulls can get it back to 621, but as long as it remains sub 621, I think we're gonna break the 619.22 today. And if that comes, we're getting 616. It will happen. This is heavy though, so I'm expecting some level of bounce, and maybe I could have waited a little bit to get in on my spread, but with how volatile we are to the downside, I'd rather have that trade open, especially on a spread. It's not a put, so I don't have to be as timely, right? As long as I have the direction correct. Apple still got $5 to go to the downside. Meta trying to get a recovery here. So is Nvidia. Look at Google. Oof. Google trying to get a little baby bounce. SPY now at that 621-ish area. Watch Amazon basically right around here. Breaking under this 218 area may lead to a further drawdown here on Amazon, especially on the 5-minute. Careful, careful, careful. Careful, careful, careful. Okay. I think what I'll do is I'll save that segment for next week. No one dropped a ticker, so I don't think there's much interest. So either share that segment or I'll junk it. I'm mostly interested in watching the market right now, to be honest with you guys. The last few streams we did, it's been dead and boring, so it's actually nice that we get a little bit of volatility and we can see what's happening right now. By the way, if you missed those spreads, they're currently trading at a 0.38, 0.41 spread right now, bid-ask spread. I've got a 0.46 entry, so they're on sale. And again, I'm pretty confident you can even get directional puts. I'm pretty confident you break the 619, which I'm not saying will be easy, but you break the 619, you're getting another $2-3 bucks there to the downside. As long as we're sub 621, the market more than likely will pull even lower, believe it or not. We're overdue too for like a red day. Yesterday was obviously a red day after we hit a new all-time high. But we're kind of overdue for some level of a pullback, and I'm expecting there being more fear in the market in general. I'm expecting people to be more scared of this market and consequently be more bearish, even more bearish after this still. But if there was to be something here for the bulls, you'd maybe look for an inverse head and shoulder here. So you got a little bit of shoulder here, here's your head, and fart around the 621 again. That's what you'd want to look for as a bull. So I said the 621 level, even before we had this little drop here, this 621 level is what I'm watching here to stay under. It's also where your POC is on the day. So where the most volume is traded today. As a bear, you want to stay under that. As a bull, you want to get over that. You could use, I'd use the high of this candle. 622.15 as a trigger as a bull. I think what we're going to see is you get a little bit up here, float around, cool off basically this big bear move because you had a hard drop here. Had a little bit of a cool down, another little sweep, cool again, sucker in some more bulls, and then drop again. That's what this is looking like to me. Lets this 5-minute cool down a bit to the bear side, lets the 3-minute cool down to the bear side. So it gives it more room to fall. Ironically, it's better if you're a bear if we stay around the 621 to under that 621 area. It actually makes things better as a bear. Believe it or not. So getting some upside relief, even though I'm short, is actually not a bad thing. It gives us more opportunity to drop even lower. Qs are hovering around this 552.80 LOI. Let's take a look at our next one on the Qs. 540. I don't think that's happening today. It'd be remarkable if it did. But that's the next major level I got for you guys. 540 on the Qs. Ay caramba. I don't think we're getting on a 13-point drop, but hey. We're already down 11. Why not double it up? Give us a 4% red day on the Qs. I tell you what, if we somehow hit like 609, 610 today on the SPY, like we really just die, I will start to open up my long leap positions. Because this would be quite the sweep. Where's our 50 MA on the daily? 610.56. That would be insane. Mostly because there's no news. It's just off earnings, really. Let me just double check nothing happened today. You had PMI, you had Michigan sentiment, we talked about that. And we had non-farm payroll. But non-farm shouldn't have caused this, in my opinion. It wasn't that bad. We've got nothing else for the rest of the day. It's gonna be probably a trend day. Again, unless the bulls break this 621 area and get a real push here, you're probably going to have a trend day to the downside. Let's see what happens here. Let's see. Q's getting a little bit of push here. Let's see which one's causing the push. Mostly fueled by Nvidia, it's looking like. I'd be careful on Meta. Meta looks real shaky here. Microsoft is just trending lower, just like grinding, falling lower. I wonder. Let me check something real quick. Let's check something on Microsoft. I thought so. What's this gap fill at? 515.95. That is stark. What is the AEMA? 518.65. 10 more points. Interesting. Nope, looks like SPY's around that 621. All right, so this is where I'm actually looking to add a few more on my trade here. And then I'll be pretty happy with that. So as long as we stay under that trigger here, like the 622.06 area, 622, whatever the high was, 15, I think. Yeah, 622.15. That is where I'm looking to stay under as a bear. Now, you would build out that inverse head and shoulder, but I would call that bull bait, meaning it looks good, and then it ends up not being good. It's bull bait. So we'll see. Sorry if I'm quiet. I'm just kind of focusing here. They're gonna try for it. Let's see. Probably need another candle here. Volume's dropping, so notice on this move up, your VMA, so that blue line there, your volume moving average is dropping lower and lower. Okay. I put an order in to open up 2 more. I did not fill on that yet, though. Let's try for 32 cents. There we go. Filled at 31. All right. So I added 2 more at 31 cents. So 46, 46, 31, 31. One, 46, 46, 154, 4. So I have an average of 38.5. Okay. So essentially my break even on that trade would be, hold on, I gotta do math. 620 minus 38, I guess. We'll do it that way. 620 minus 0.38. And my break even on that trade is 619.62. So for this trade, for the spread that I'm in, which again is buy the open the 620 puts, sell to open the 619 puts, my break even is 619.62 by the end of the day. So as long as I'm under that by close, I break even. And my max profit is going to be at 619. So anything under 619 gives me max profit on this position. Max profit on this position with a 38 average. It's $162 per spread. So that gives you a 3-to-1 risk, roughly 3-to-1 or 2-to-1 risk reward. Right? 30. I'm risking 38 to make 62. So we shall see how that works out. Again, betting that the bulls aren't really going to push it higher than here. We're farting around the trigger point here, which is right around the 622.15. You also have VWAP here, and you're getting squeezed in between your short-term EMAs with your POC here. So again, seeing this push up on lower volume here is more indicative of a bear cool down than a bull reversal, meaning get a sharp move by the bears down. Eventually that's going to come back up, right? Market moves parabolically, comes back up, and as it comes back up, it starts to crest again before it goes lower. If it's a trend, and if that's what we're seeing is a bear cool down here, which I'm betting that we are. Now the bulls can obviously squeeze it, or we can get a big push or something, and I get pushed out of my position. But the way this is right now, it's getting pinched really tight here. If this fails this general area, it's going to go down. It's going to break low a day. It's going to break 619.22, and this is going to go to 616.17 by the end of the day. It is good risk to reward for me. That's my 2 cents. VIX rejecting this 2142, and this is actually a nice little confluence here. As we're getting a little bit of resistance here for the bulls, VIX is actually back at an old LOI, so a support level here theoretically, now that we're above it, at 2030. So if VIX holds 2030, again, not a one-to-one relationship, it's something you want to be mindful of. You could see volatility bounce and expand again. IWM got a nice little rally here, sitting around the 1213.97 LOI. This is also getting pinched. Qs are not looking too hot. So basically all markets are getting pinched here with volatility on support. So it's a make or break moment for the market at this current point. Nvidia just made a high on the day. So that's good if you're bullish. And it looks like Nvidia is going to try to save the day based on this price action. Meta's trying to find a bit of a rally here. Microsoft is not. Microsoft is just eating glue in the corner. Google pretty flat, all things considered. Apple could push even lower. I'm really happy I closed those puts. With the way this is looking, let's look at the daily. Ooh, look at the daily. It's 205.36. What's the low a day? 205.52. Watch the low a day. Watch 205.36 or 50 MA. Good spot to catch a long if you caught a long on Apple there. If it breaks, though, that's really bad on the daily here. On the daily in general, this isn't looking clean. Pretty bearish here on the daily, on the weekly. And it's just kind of chopping on the monthly, but the daily and the weekly are not looking good for Apple here if they can't hold it together. Tesla, you guys know how I feel about Tesla. Let's check out Amazon's trying to hold it together after the gap down, sitting around the 50 MA on the daily. Currently near the high of the day here. By the way, this isn't saying much, right? So Amazon's near the highs of its day. Nvidia's near the highs of its day, right? So you might think things are looking good. Remember, they still gap down. Nvidia's still down 2%, right? Amazon's still down 6%. Like, this is still not... No one's out of the woods yet. By any means at all. This is not good. And it's looking like the bulls are going to try to crack it here. So, we will see momentarily. Whenever I see a candle like this, it looks like a false breakout low. Notice the volume here. Again, I want to keep referencing this because sometimes I feel like I'm crazy when I look at the chart like this. But when you see a reversal here and the volume, it doesn't even matter the volume is lower. It matters that it trends lower. That's a big warning sign. So you have 1, 2, 3, 4, 5 green candles in a row. But look at your VMA here. So again, volume moving average. On this candle, 402, then 371, then 360, then 339. So volume's ticking lower. As we're going higher, it's not a good sign. Volatility is on that support right now. It's a few pennies shy. So you're having volatility cool off here, potentially looking to ramp again. You've got this bull move, which could be a sucker move here. That's why I'm saying it on lower volume. This is what you want to be wary of. Because if this fails, if bulls fail it here, and if bulls break back underneath that POC, you're probably going to see a doom candle. A rough, sweep. Because shorts are going to dive on this, and longs that got in here are getting the hell out of the way back to the downside. It's going to be the same thing, and we're going to go even lower. And it's rare when I'm on this program, and I'm telling you guys things are more bearish or things are more bullish. Today, things are more bearish. Things in general are more risk-off, and that's why I took a spread versus a traditional, just doing a straight-up put or anything, because there was this possibility that we get some level of a reversion here. And a spread protects me from that eating a bigger loss, obviously. But also I get the benefit of time working for and against me, depending on how price action moves, where if we do get that reversal, I can actually keep more premium, and I have defined risk to reward. I know that I'm risking, whatever it was, $38 spread to make, whatever it was, $62, right? So having that defined risk to reward and getting an idea of what it looks like here, what risk could look like at that entry makes a lot of sense to me. All right. I'll stick around for a few more minutes here, guys, and we'll see if we can push lower here on the market, and then I will release you to your devices. Keep an eye on Apple here. Remember, if it breaks this low and it breaks under, I think it was 0.38, you could get a decent bear side draw on Apple from a daily perspective. Nvidia's starting to look a little tired. Meta's looking a little tired. It's trying. Microsoft is eating glue. Google's eating glue. Watch Apple. This is going to basically be your catalyst for a reversal or a continued downside push, I think. But we're getting some bullishness on the market on even lower volume. Again, 339, 313, 317, 309. Volume is dropping. I know this looks scary because it's a bullish move, but volume's dropping and they're not really out of the woods by any means yet. Not at all. This is looking like one of those, what's the phrase? Staircase up, elevator down sort of thing, where you slowly go up and up and up and up, and then you drop like a bag of hammers. It's kind of what I'm looking for here. I'm looking for the hammer drop. And as long as this volume continues to creep lower on this reversal, on this mean reversion, then I'm more than likely going to be correct. Especially now that we have that green star around that POC. This 621 area is going to be your trigger. Getting out of that's done. Ooh, look at Apple. Apple is on the 50 MA on the daily. It's trying to break it right now. This is going to be the anchor around the market's neck today. If it stays under this. That's going to be not good. The algos are going to see that. Alright, so right now the market is held together by glue and duct tape with Nvidia's reversal, essentially. Like, essentially, Nvidia is putting the market on its back here. And if Nvidia shows any sort of bearishness here, you got a VIX 2016, so you're getting VIX right back to that support level again. Meta's looking real weak. Microsoft can't sustain any sort of reversal or rally. Google's not looking good. Apple has broken that 50 MA on the 1 minute. If you get a 5-minute close under this, this will sink the market today. It will be an anchor on its neck. It will be an albatross on the stock market's neck today. Testing the green SAR here. So this is important, guys. Look here. You got all your EMAs, MAs real tight here. You got the green SAR on the POC. So this whole little space of like 50 cents here is super important on the SPY for bulls. They got to hold it here. If they can't hold it here, you're going to see a lot of fear seep in. And like I said, I would more than likely like to see, or more, I would bet on seeing elevator down versus staircase down. It'd be a sharper move to the downside. In fact, I'll put my money on it. Before I go, I'm going to grab some 621 puts on the market. All right. Let's get them right around here. All right. I'm long the 621 puts on the market, and I've got a 124 average. Okay, so now I'm long a put debit spread, and I'm also long a 621.0 DTE. Again, betting on basically this to break and get a big vacuum to the downside here. But anyway, guys, I think we're going to wrap it up. You can also take a 1 DT if you want to be a little bit more risk averse. I think I've talked you through exactly what I'm looking at here. If VIX sustains and gets back over this level, you're going to move to the downside. Basically, your trigger here for a downside push, I mean, you can move it up now to like 622, breaking under 622. Look for confirmation under the POC here, 621.88. Look at low a day and 619.22. Both those go. You're going to get a vacuum to the downside. Yeah, so Nvidia is trying to hold the market together. So if we see Nvidia start to round out, well, this is a decent rally on Nvidia. It's not bad by any means, but this will level out. It will. And when it does, it will add another weight on the stock market's neck. Meta, I've been saying, is looking weak. It's going to reverse. It's more than likely going to get sub 753 pretty quickly. Microsoft, for now, has not been able to sustain a rally. I believe that would be the trend. If you want to be bullish on Microsoft, watch the 50 MA on the 1 minute here. That'll give you a good idea. If it can sustain over the 50 MA on the 1 minute, you'll probably have a chance at a reversal. As long as it's staying under that, though, I wouldn't even I wouldn't even bother. Google is flat. This actually favors the bears more than the bulls because this is showing on a bear day that, yes, they're holding their ground, and you had a test up here, test down here. But as market sentiment shifts, as I believe, to the downside, that will be a weight, and that will pull Google down. As Google gets pulled down, that adds more bearish pressure to the stock market. The market goes down even more. We talked about Apple breaking that 50 MA, which is going to be crucial today. 200s are in the cards for Apple, which you have all this volume down here. Look at this volume shelf here, around 202 to 200. So getting all the way down here, another $2 isn't crazy. Remember that implied move on Apple is $8. So $8 either which way, plus or minus, is realistically the expected move for Apple. So we haven't hit it either which way yet. It's still possible we can hit it to the downside. Tesla, we talked about it ad nauseum. And Amazon, similar story to Google here. So remember, Amazon's already down 6%, so I don't really think Amazon's going to continue to die, especially with how the daily is. But if there is continued weight on the market, if the VIX can sustain over a 20 VIX, there could be another pull here on Amazon to that magic 210.88 level. This was an important level a few months ago. You could see some level of strength, or I'm sorry, response there, some sort of reversal at that point. All right, guys, that's going to wrap it up for me. You guys know what I'm looking out for on the market. Be very patient on this bear move, in my opinion. I think essentially the second NVIDIA starts to give it up here, the way everything else is sitting, assuming volatility can crest over that 2030, you're more than likely going to push down. And like I said, I'm anticipating more of a staircase up, elevator down sort of thing. Where I'm wrong and when I will be wrong will be let's see. So I will keep a short open basically until 625, 624, 65. So between 624.65 and basically the 200 MA. If the market can break there with volume, keyword with volume, then I'm wrong and we're not getting a pull lower. If it can't, then we're more than likely going to continue to the downside. It's just a matter of when, honestly. Anyway, that's going to do it for me, guys. I hope you enjoyed the rest of your week, your weekend. Don't blow your account on a Friday, right? Take it easy, relax. It's Friday. You probably had a good week. So if you had a good week, continue the good week. And maybe don't get caught up in the feels of the market, especially with higher volatility. With that being said, guys, some say you need an extra trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash Angle. Have a great rest of your day, and remember, precision beats prediction every damn time. I will see you all next week.
The time has passed, and that's a wrap. You're on with the